RBI. But moving on, Tiger Global-backed B2B construction material startup Infra.Market has divested about 10% of its stake in RDC Concrete to investor led by Ashish Kacholia for $20 million. Now, the deal values the company at $225 million. This comes ahead of RDC's IPO, which is planned in the near future. Remember, Infra.Market had acquired RDC Concrete for $90 million in mid-2021 when it had 49 ready-mix concrete plants, which currently it claims have grown to 100 plants across 48 cities. To take us through the significance of this deal, joining me now is Infra.Market's co-founder, Souvik Sengupta. Souvik, thanks very much for your time here on CNBC-TV18. If you could start by telling us about this deal where you've offloaded 10% stake for $20 million. Why now? How much stake do you now hold in RDC? And what was the idea behind the deal?
So thank you for having me on the show. We held around 100% stake in RDC before this transaction. So we hold around 90%. And the idea, of course, was that we wanted to ascertain a value to RDC. The employees at RDC and the management at RDC has been building this company for close to a decade. And they obviously deserve that they see value in what they are building. When we acquired the company from a private equity fund, our thesis was very simple, that concrete in India is highly underpenetrated. And it's a category that's going to grow. We acquired this in mid-21. The company has grown substantially since then. The number of plants have grown almost threefold. So have the revenues and the EBITDA numbers. This 10% stake sale is just to get us some public market investors in the company, get benchmark valuations for the company as we sort of pave our way to an IPO.
Okay, tell us a bit more about RDC. You spoke about how concrete penetration is low. You've seen the kind of growth that you've seen since you acquired it from True North in 2021. The latest deal, in fact, shows that that's an upside of over 2 times from the original investment, we understand. Tell us what kind of revenues and profit the company is generating now.
So when we acquired the company was doing around about 50 crores EBITDA, close to 800 crores revenue. This year, the company is expected to do around about 2,000 crore revenue and 200 crore EBITDA. Last year, the company closed at around about 1,500 crore revenues, 130 crore EBITDA. India has a $40 billion cement market, and only 15% of it is penetrated through concrete. 85% is dry cement. Globally, it's completely opposite. Developed markets usually have 80 to 90% concrete penetration. India is just entering its phase of concrete penetration. It's a high growth market. We've gone from 40 odd plants to 105 plants. There's a roadmap for RDC over the next 24 months to further double this plant capacity to around 200 plants. They are present across 20 odd states, almost covering pan India. They are the only independent concrete manufacturer in India. And we think concrete in India is just getting started. And it's a highly underpenetrated segment. Lack of brands. There are hardly any brands except the existing cement companies. And RDC is uniquely poised to be an independent concrete company and in a high growth sector.
Okay, so you're hopeful that in the organized part of the market, they will be able to make a mark. But, you said the idea to divest this 10% stake is to find valuation. So let me take that forward and ask you, how soon are you looking to take RDC public? And, is there a milestone or something that you've said that the company should hit before you go to the IPO? And, how much stake will you be offering in this, IPO itself? From 90%, how much would be up for sale?
So it's not only to determine valuation, it's to determine the value of what the management has eventually created. We've also given around 5% ESOP to the RDC employees as part of this stake sale. We are thinking of a 24-month roadmap. It could be quicker, to be honest. We are thinking, but 24 months is the outer deadline for us to take this company public. It's not about, we don't know how much we are selling. We are not under any pressure to sell. But the idea is, when we go public, there's some minimum regulatory requirements of how much we need to offload. We'll meet those requirements. That is a decision we'll take closer to the IPO. As on today, the idea was to recognize what the employees at the management at RDC have built. We've given them ESOPs at RDC to value those ESOPs, to value what the management has built. This equity round sort of demonstrates that they've actually grown the company 3x in the last 2 years in an industry which is high growth, but equally competitive. And and we know that it's going to, and also it's a testament that this company is going to grow 2x, 3x over the next 2-3 years. And I think that will, and we want to show further value creation in 2-3 years by taking this public.
Sure. Shouvik, we just have a few seconds left. What do you plan to do with this $20 million that you've got from the deal? You've been looking at some acquisitions in the past. Are there more in the pipeline?
No, there's no, at the moment, no further acquisitions in the pipeline. This 20 million is primarily, we've just we've generated some cash flow for us through basically divesting. The idea for, it'll be used in the growth at the holdco, but no further acquisition.
All right, Shouvik, it was a pleasure speaking with you. Thank you very much for your time here on CNBC TV 18.
Thank you for having me.
Moving on.